Hey guys, today's episode is with John Fazio and Wayne Kimmel of Nerd Street Gamers. We're going to hear how they built out a nationwide network of eSports gaming facilities. Pretty interesting. If you like this kind of content, hit that subscribe button, leave a nice comment, and I'll send you a list of 200 questions that investors are going to ask you. This is great preparation before you start pitching investors. So hit the subscribe button, leave us a nice comment, and then email us at info@foundersuite.com, and I will send you that list of 200 questions investors will ask you. Until then, enjoy the chat with Nerd Street Gamers.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have John Fazio of Nerd Street Gamers and Wayne Kimmel of 76 Capital, both hailing from the historic city of Philadelphia. How's it going there, guys?
Going great. Thanks for having us.
Yeah, great to be on your show, Nathan.
Yep, cool. I think we've had maybe one other Philly, and I can't remember we haven't had too many folks from Philly on the show, so it's good to have a little representation here. Cool. Well, let's go straight into this. What is Nerd Street Gamers? Great name, by the way.
Appreciate it. Yeah, the name comes from being founded in a building on North 3rd Street. And when you put the N3RD together, it looks like nerd. We are an esports infrastructure business. What that means is we help kids who are into playing video games play them in competitions and frameworks that help them progress in life. You know, it might be college scholarship opportunities, might be just the social interaction and training we all get from traditional sports now applied to, video games like leadership and camaraderie and dealing with failure and communication and other life opportunities that spawn from the types of networks you get, in competition. And so what we do is build the physical venues that actually connect high schools and allow more kids to play, not requiring, necessarily you being able to afford all of your own equipment. You can use our facilities on behalf of the school. And our mission is really to increase the market size by allowing more gamers to get access to the type of equipment needed to compete at the highest level.
So let's talk about form factor. You talk about physical venues. What does it look like? Is it a stadium? Is this the chair? Is this just the joysticks and whatnot, or all the above?
I would say it's a collection of those. We have 3 different models. We have a local model, which is about 3,000 square feet. You've got about 40 computers in there. Each one of the computer stations is equipped with a computer, an Xbox, a PlayStation, so that you can compete in any different console or types of tournaments that we run. There's typically a small stage where the competitions that are happening are being broadcast out on the internet and can be watched by kids at home on various apps like YouTube and Twitch. And then we have a mid-grade kind of 7,500 to 15,000 square foot space for universities. Those look very similar, but a lot bigger. And when you go to the larger step up, we build a full sound studio. So you've got, sets and stages for those broadcasts as opposed to just a little section. When you're at the university level, the university teams want to take advantage of that type of content production in a set around the competition that's happening. And that university facility enables kids at the school to now play and access on the equipment. It gives the varsity team a space that they can compete, just like your sports gyms at a university where the gym itself might be open to the public or the greater student base, but there's a varsity section to it. That's very similar to how we build our facilities. And then we've got our large regionals right now in Philadelphia, Denver, and Los Angeles. Those are 30,000 square feet and up. Those are hundreds of computers. They're multiple sound stages, big stages that 1,000 people can spectate and watch up on the stage, grand production. And so we build a collection of those very much like traditional sports facilities where I might spend every Thursday playing in a single gym, in a basketball gym. And then when I'm ready to go to a tournament and I'm playing in an AAU tournament on the weekend, I go to a facility with 40 courts inside one gym. So very similar spread.
Wow. And do you own these, or is this a franchise model, or you're leasing them out, or what's the sort of structure?
They're all owned. These are buildings that we lease in various locations, and we have an awesome partnership with Five Below, the discount retail store, where they're actually building the stores right adjacent and attached to their Five Belows with a portal, we call it, an entrance between the two stores. They're funding the development of these build outs alongside their Five Below stores because of the benefit of the people, the kids, the parents that are all coming into the store and now go over to Five Below and spend money. And so that arrangement allows us to scale really rapidly and fast alongside their already existing infrastructure.
Are you running the tournaments themselves, or are you the infrastructure layer and then another entity or group, or different entities are running these tournaments?
That's a good question. So, the facilities for us are just an access point. What Nerd Street is as a business is a gateway to these opportunities that I mentioned: tournaments, camps, content, educational materials, those types of things. And so our facilities, called local hosts, are the best possible means to connect to that ecosystem. I love to use the Google Pixel and Google analogy where, Google is used on Samsungs and LGs. And however, the Pixel, their phone, is the best possible version where they get to show you this is what it can look like, and this is what it looks like when it's fully integrated. And so Nerd Street as a platform is used in a variety of venues that are not ours. We have competitors playing at all sorts of venues, competitors playing from home. Our venues simply provide that increased access point. So yes, we are an operator. We run tournaments on a weekly basis. Last year, we ran over 300 tournaments in a digital environment that really helped us continue growing amidst the fact that our stores were shut down for the pandemic. And we continue to kind of see that platform growth from our competitive programming. Camps have been a huge boon for us, an awesome boost with all the kids that are at home and really want that type of programmatic material, even if they might not be ready for tournament competition at the top tier.
Yeah, you mentioned the sort of access problem before the call. I guess that's if my kid wants to be a serious competitive amateur professional gamer, I guess I either have to invest a lot of money into setting up a rig at home, or that's part of what you're solving, right? I don't have to.
Yeah, exactly. Today, an article just announced our partnership with the Parks and Recreation Department in St. Louis, Brentwood, Missouri, specifically, where we have a facility, and that Parks and Rec is now offering to its participants the facility to compete in esports. So when you go to sign up for soccer, basketball, football, there's an esports program and there's a venue, and Parks and Rec pays on behalf of those players so that they have that type of free access that we're used to from traditional sports. So we continue to scale in that method so that more and more people can actually get access to this right now, and then for the person who does maybe have access at home, the reality is that playing in person next to each other on standardized equipment is the type of integrity driven competition we're used to from sports. If right now I play at home on a better computer with better internet, I'm going to be better than you. My better soccer cleats don't make me play soccer better than you, right? And so putting people together in the same building on the same equipment is also an essential part of growing this industry. We can't scale this to where sports are if we're all just playing from home.
Sure, makes sense. Are you opening back up the physical venues yet, or still kind of what's the status of that?
Yeah, so our venues started opening slowly based on state by state, protocol and what we could do to, keep our customers safe. We don't do any live events, and live events are still shut down for the foreseeable future. We have started to get bookings for Q3 and Q4, so that's a really good thing to see that it's starting to kind of pick back up. The stores that have that are now all open are seeing traffic come back as the vaccination plan is rolled out, and we're seeing yesterday the CDC lowered its guidance, or at least modified its guidance, and various states now allowing for live events and access. And so it obviously molded how we return here. We have staff wearing masks. We have contactless processes that were new, and we have the social distancing and separation, but we are seeing the traffic come back, which is really exciting.
Very cool. And what's the backstory? Are you just a super gamer that wanted to build a business around this, or something else?
Yeah. So, myself, I grew up a privileged individual, middle class to great parents who supported everything I wanted to do. And I kind of had a dichotomy in my life where my father realized I was good at sports, and my father realized I was adept at technology and computers, and he pushed very hard in both of those. And so gave me a computer, to take apart that cost more than the computer he worked on. because he knew that I'd figure it out, at 9 years old. When I was 13, he printed out trifold brochures that said, "I'll fix your computer or make you a website," and then drove me around all the biggest houses in the neighborhood to put them in their mailbox. And I was running, a consultancy by the time I was, getting into high school. And so, that was a privilege that he gave me and really, kind of drove me both on the entrepreneur side, but also just being really tech adept. And when you're tech adept like that, PC gaming is the obvious recreational activity. And so I got very into PC gaming, but at the same time my athletic skills allowed me all this opportunity. I got put into elite training academies for soccer. I got to play all around the world. It helped pay for my college. It created all these opportunities. And so with that dichotomy, I kind of had this split where I had friends who were on my soccer team, and we're getting likely letters from we're committing to colleges, and we're getting scholarship offers, and we're finding out that we're going to Portugal in a month to play in a tournament that's all paid for. And on the flip side, my video game friends are training just as much as I am for their video games. They're playing in competitions. They're putting just as much work in. There's no college ecosystem. There's no career ecosystem. There's no upside for them. And so it was probably, middle of high school where I was really like, video games have a bigger picture here in our society. Like, video games can do a lot more than they're doing. It's not just about entertainment. There's real life opportunity that can come from them. And so that inspired me. I found a LAN center, which is like an internet cafe in a mall, and they were running a video game tournament. And I just walked in and said, "I have to work for you. I'm really good at networking. I can help with whatever you need." They needed me to write a screensaver program that put advertisements from the rest of the mall on the screensavers, and they hired me, and I got to work for them. And while I was there, I came up with a business plan called Digital Gaming Arena to build this DGA network of video gaming arenas all across the country. This was 2005. And so we were pretty ahead of the curve here. And I tried to raise capital. I pitched the biggest names I could get my hands on as a naive 18-year-old. Didn't, got a lot of no's.
At the time. I love it.
Yeah, got a lot of no's, and then got so frustrated with the process. And at the time, this was like 2005, 2006, 2007, where the web mobile 2.0 boom was taking. So every one of my friends is getting funded with the venture capitalists, and I'm sitting here like, I have a great idea, nobody's funding it. And so out of frustration, my partner and I, who was working at the same internet cafe with me, started a software company. And we said, we're just going to start writing and selling our software here to make our own money. Screw the VCs, we're doing this our own way. And we set off on our own. And then what happened was we had a really lucky break with a couple social networks for DJs in Toronto, in the Canada area, that shared music before SoundCloud, went to millions of users. And we got this whole crash course on like how to scale a massive business. We're sending servers out around the country. We're flying back and forth and building this app. And then we realized we can sell this to businesses. And so we turned around, packaged it up as a consulting service for, scaling your tech stack right in the middle of, what was the cloud boom. And we had a huge success, and, had clients like Comcast, the city of Philadelphia, Time Warner Cable, Elsevier, who we helped, migrate their textbooks to iPad versions of their textbooks, and, really got to do some really cool stuff. 10 years into running this business, good capital, we start making our own investments in startups, and we were like, we got to reapproach this situation. And at the time, we had just been running these LAN parties, which, for anybody who's not familiar with the term, LAN means local area network, and a LAN party is where you all bring your computers in and play video games together, in the same place for a night. And that's all it was. And our software company, a bunch of software, nerds, were just sitting around playing video games. And it started in 2011, this kind of party. We started calling ourselves the Nerd Street Gamers because we're on North 3rd Street. And then about, I think it was 6 or 7 years later, 2016, 2017, or 2016, 17, that I said, what? This is what I was talking about. Let's build this. So we wrote the check from our software consultancy, Jarvis. We funded the first local host, under the Nerd Street brand, started running tournaments. One of our tournaments became the biggest in North America, and enter Wayne. And we meet, and, we decide that we're going to fund this thing and go big. And, that's where it really took off.
That's a great story. It's a fun kind of, full circle story. I like it. So let's jump off there. So maybe Wayne, how did you come across these guys, these crazy hackers down on Nerd Street, and how did you sort of insert yourself into this? And tell your side of the story.
Sure, Nathan. Again, appreciate being on the show, and it's really great being on the show with John Fazio. From Nerd Street Gamers. We're so proud of what he and his team have done. Since the story that he just told, and so we. At 76 Capital, we're a venture capital fund that invests in seed and early stage sports tech startups, everything from the eSports industry to the sports betting industry to just anything that uses tech and data in the sports world. And as the story goes, as John was saying, we actually met through one of guy that was working with John at his software company. His name was Danny Harvith, and Danny actually had interned and also worked for us at 76 Capital. And I was actually at the end of one of my speaking tour. I had written a book. And I was doing one of my last talks in Philadelphia. I'd gone all around the country, come back to Philadelphia, give a talk, and I say, we're looking for people that are interested in building out the future of the esports industry. And Danny happened to be there, and he ran up to the front afterwards and he said, "Hey, Wayne, we got it. You got to come and meet John Fazio. He's the guy. He's the guy who's doing this, and we're doing this, and you got to see it." So it was really amazing. We went down to North 3rd Street. Saw it. Actually, the crazy part is we had our first meeting. Actually, John mentioned this earlier. Worked in a mall. Our first real meeting was in a mall, in a food court at a mall. My partner John Powell, he and his family had built malls all around the country, including the King of Prussia Mall. We were at another mall. And we're talking sort of about what we had been thinking about, the arcade 2.0, putting esports in malls. And we brought John down for our first meeting, and we started talking about this, and John starts telling us the vision. And our other partner, Chad Stender, was there, and we're like, oh my God, like this guy knows way more than we know. This is really interesting. We like his plan better than what we were thinking about, from, trying to find an entrepreneur to kind of fit into what we were thinking. We like John's plan better. And we're really fortunate that we got the opportunity to invest at the very, very early stages, with John and help build Nerd Street Gamers. We were able to bring in another great partner to invest with us at the same time. And it's been great.
Yeah, it's fun. So that was the seed round, or was that a Series A that you came in at that first one?
Yeah, that was I guess we would call it the seed or pre-seed at that point.
Seed or pre-seed. Mm-hmm.
And I always get a kick out of seed, pre-seed, Series A, all that kind of stuff. I mean, I guess
Sure.
As an old guy being in the business for over 20 years now, what seed is today is what I guess Series A used to be. So it's
Totally.
Series B, quite frankly. So
That's fun. I just watched seasons 1 and 2 of Stranger Things with my 10-year-old daughter, and I just love it because they're spending a lot of time at the arcade, and this is my childhood. Right?
The mall.
Yeah, at the mall.
I remember
at the
when
mall.
the mall was the place to hang out.
Totally. And so it's kind of interesting to hear you talk about like Arcade 2.0, right? Like, and now you're seeing all these mall properties that are vacating and either probably turning into an Amazon distribution center or a video game, tournament place, right? I mean, what are we going to do with all these malls?
Well, they all just call John. They're all calling John. Every single one of them.
Totally makes sense. So I guess this is a question for either of you to answer, but or maybe it's to John. Wayne's interested in the business. You had tried to raise money beforehand. He wants to write you a check. Do you go out and kind of run a bake-off with other investors, or you just have a rapport with Wayne and take the check? Maybe talk about putting together that very first round of capital.
Yeah, so we were in this place where, this business was something that, like I said, it was like a passion project, right? And then all of a sudden I'm funding it. We wrote a 6-figure check and, opened this store. We had, the software company had the building at 908 North 3rd Street. We cut it in half and separated it, and we put the Nerd Street, the local hosts, on one side as like our first test store and demo. And then we were at this point where it was nonstop packed, and we were just like, we need more space. And so we were kind of deciding, and what ended up happening as soon as Wayne funded us is we cut down the wall, and it became like a milestone for us, like get the wall out, and local host took the whole building, and we sent Jarvis off to some nice offices in Center City while we kept the local host a community oriented kind of really nice neighborhood building. And so right about this time, I'm debating just continuing to bootstrap this. We had grown the largest event in North America with ourselves and nobody else, and I didn't really have the greatest. I'm actually somebody who grew up admiring venture capitalists. Like I was a 10-year-old reading books about John Doerr. Like I had that kind of mentality. I worship people like Michael Dell and Bill Gates, and so I really had this appreciation for it. But at the time I was really soured on it. I was like, I don't want venture capital. I don't want somebody telling me what to do. Like I have this vision, I want to do this, I don't need somebody else's. And so I think when Wayne came to us, and he probably made it, he put the flowers on it, but I think what happened in the beginning of that conversation was I was like, no, I don't like that. And that was the first thing I said. I was like, that's not right. So if you're gonna do that, this is like, no, and you have to get on board with what we're doing. And then at that point was where everything started to change, because two things happened. One, they said yes, and they were like, yeah, we do like your idea better, and that was like really validating for me. But two, we started to talk about the strategy, and it wasn't just a venture capital company. It was Wayne, it was John Powell. He mentioned the other investor, George Miller. John Powell's got this experience, internationally building retail, like at the top tier of success. So he's got an experience level I really want. George Miller has this experience level building localized regional media companies and working in gambling and casinos. Mm-hmm. And so that's the type of experience that's going to be really helpful for me as I'm growing out these regionalized, growth models. And then Wayne's got 20 years of VC experience to kind of, come in and say, hey, the next few rounds of because I always knew once you take the first check, now you're in this, you've got to continue to fuel that growth. And it was right around that time that I just started getting familiar with, some of the blitz scaling strategies from Reid Hoffman and such, and, kind of really dug in. And I realized if we want to do this right, if we want to go out and build all the, like sports grew organically. And so there's 20,000 operators of sports facilities. If we want to get out and lay the whole country first, we're going to need venture capital. We're going to need really big growth backing. And so, having Wayne in our court to kind of guide us and walk us through that, combined with this retail and media experience, was just really kind of kismet, and it felt right. We negotiated terms with zero, contention. Like it was just an easy discussion. We found it. We made the deal. And as soon as we made it, the growth like kicked into high gear. And at that point, I decided to jump over, run this company full time as CEO. I left the software company. My partners took that, and they're continuing to run it. And I'm still a partner, but I have no day-to-day, involvement there. And so, I jumped ship to Nerd Street, hired my team. I built it out. We opened a facility in Denver to prove, okay, we proved this thing works in one place. Let's prove that it works in two places, and that it can scale, and that the unit economics align in multiple markets. And so as we did that, Comcast was like the next investor that was interested. The ironic part was that they had actually reached out to us before Wayne through NBC Sports Ventures. And like I said, I wasn't very much into the idea of venture capital, so we just kind of brushed them off. They came back to us, and at the time they were really interested in doing the deal under NBC Sports Ventures. NBC Sports Ventures had just began to put us in, like, where do we do diligence? Is this Comcast Ventures? Is this NBC? So they start talking internally. Tucker Roberts, who is the son of Brian Roberts and was at the time running Comcast Spectacor's gaming division, had just bought the Philadelphia Fusion Overwatch League franchise for tens of millions of dollars. He jumps in and says, that's our deal, and took it away from NBC Sports Ventures. We did a deal directly in BD, where they put us on the balance sheet as opposed to through a venture fund, and that was our kind of closure of the seed round as we moved on. And at that point, we had proven market fit, we had proven the unit economics, and we'd proven that they scale. And it was really just about a strategy to blitz scale to cover the country.
Got it. That's around the Series A time, right? The 12 million. Is that correct?
No, so what I'm talking about was a little bit earlier than that. Our seed round, so first it was Wayne in October, November of 2017.
Okay.
Comcast joined in June of 2018. Actually closed on my wedding day. Was hiding from my wife in the other room. Like, hey, we got to get this done. This has to close. Did the wire hit? In a 5 hours ahead in time zone and panic mode, and they go, oh, we closed. We're good. And I put down my phone, didn't look again, and I didn't look at it for another week.
Good for you. Oh, that must have been a fun time, right?
And so that the 12 million Series A actually came August of 2019, a full year and a little bit later after the Comcast seed round, Comcast and 76 seed round had closed.
So like you said a minute ago, once you take that first check, you sort of know you're on this path of taking more. How did you know when it was time to go raise some more money? I mean, the model was working, it sounds like. And how did you put together that Series A, which sounds like it had a few more names around the table?
Yeah, so the funny part is when I met Wayne and I started doing my diligence, whenever I used to do diligence on clients, I'd always be like, who wasn't happy with them, right? And so I was like, I got to find somebody who didn't have a great time, and I found somebody who, it was just like a disagreement, and I'm talking to this guy and he's telling me what was wrong, and he's telling me that Wayne pushed him to grow too fast, and Wayne pushed him to build this company too big, and I was like, oh, okay, got it. I was like, that's what I want. It was like all those things were exactly what I knew comes, and that's exactly what I wanted. And so it was one of those interviews where the bad was actually exactly what I wanted to hear. And, that was a person who should not have taken venture capital, period. That was not the model, right. And so when he that ironically closed the deal for me. And at the time I really, I knew, listen, like, you're going to build something national, the returns that you have to produce. Okay, I could bootstrap this company. I could build one venue, get to profit, borrow from a bank, build another venue, build 5 more, and it'll take me 10 years to build 100 venues, and I'll probably have a good company that's fighting for its life against competition, or we fund this thing, we build 100 venues in 3 years, we get out rapidly ahead of the curve, we build established relationships with high school districts and parks and recreation departments, and you name boys and girls clubs and more, and now we have an established platform, and which I had mentioned before, is a little bit more than just retail. The retail is kind of the access point, but that access, would enable us to grow this digital platform that we believed could be something, global, and a massive business servicing people all across the world with access points and opportunities from video games. And then in the pandemic, we kind of found out that the digital platform had a lot more appeal even in advance of the physical scale, and that took off and kind of kept us afloat in some ways. And now we find ourselves in a situation where our digital platform is outpaced our physical platform, and we're playing a growth game on both fronts, and it's really an exciting time.
Yeah, that was actually going to be my next question. Is then you raised another round more recently, or at least announced it more recently, with Founders Fund, and I was going to ask, like, with COVID, wasn't your physical business shut down, or so how did you go raise money with that? I think you kind of just answered my question. The digital has sort of compensated or taken over, right?
Yeah, I mean, the Founders Fund is actually a great story, which I'll give a little context to. So, it was 76 first, and you're pre-seed, and I agree with Wayne. I hate these titles, but I think it'll give a good timeline for listeners here. So we had Wayne come in pre-seed, we had Comcast close out the seed round, and then our Series A was done with Five Below, and Five Below coming in to do our Series A, which was so important for us strategically, was because of those locations I mentioned. They agreed to build 75 of these stores with us without us spending CapEx on getting these done. And so that was immediate retail scale for us. That partnership was incredibly aligned. We got a commercial partnership in place to build the venues. And then they also invested in us to take an equity piece because they believed, in the vision and where we were going.
And Five Below, to be clear, I think I've been in one, unless I'm confusing it with someone else. It's a store where it's like a dollar store, but it's a $5 store, right?
Yeah. So what, when they first reached out to me, and Wayne will attest this, I was kind of like, a dollar store, like, the brand doesn't align. I'd never been to one. I knew what Dollar General was like, and I kind of just had, an opinion. And so I ended up talking to a mutual friend who was a lawyer for them, and he was like, "You just gotta go see it. Go in and talk to them." And so they invited me in, and it happened to be on one of the days where they were running this Mortal Kombat tournament just for fun. They just like put a PlayStation out in the middle of the store and said, "Play." So it's popping. There's kids everywhere playing Mortal Kombat, and I walk into the store. It's just a good selling point from them, obviously. But that's where they had gotten the idea for like, hey, we're getting all these kids who would never come into the store are coming to flood the store to play Mortal Kombat, and then they're buying all this stuff. But what was so different for me was twofold. Number one, when I walked into the store, it didn't feel like a dollar store. It was clean, it was organized, the staff was very nice, they greeted you, and at Five Below, at the $5 and below, it was a lot better product selection than just dollar stores, but they also had a 5 to 10 section. And so it was like a really good product selection and breadth. And then number two, I met Joel Anderson, the CEO, who's now who led the deal and who's now on our board. And he gave me this really strong vision about how this was about bringing the high end consumer experience to a more affordable market and making that price point more affordable, more accessible. And that was like what that was so aligned with what we were trying to do. We're trying to take $3,000 computers and make them more accessible to the markets that need those computers the most. They were trying to take expensive equipment or expensive products and do the same. And the perfect proof point of their capability and their mission is this basketball story. And it's a really good story. If you ever go into a Five Below HQ, everybody has a basketball on their desk with the number of stores they had when they joined, and it's a deflated basketball. The story comes from they wanted to sell $5 basketballs, the good ones, the Spalding ones, and they couldn't because the price point was too high to get them shipped in from China or wherever it's coming from and whatever. And so Joel, trying to fix this, flies out, talks to the manufacturer, talks to the distributor. They're all sitting around trying to like, how can we cut costs to get this thing down? And he has the idea that, wait, you guys were packaging them over here in Asia, in these big boxes that are pumped up. Why don't we take the packages out, deflate all the balls, stuff as many as we can in a shipping container, ship it over there, and then we'll we'll flatten the boxes, we'll take the boxes back out, then we'll package them in our stores. Long story short, they sell $5 basketballs now because they were able to, figure that out and innovate. And that's their whole, ethos and mission. And that, hearing that story, hearing about this type of, mentality, I was like, I'm in, let's do this, let's build this together. And now when you walk into one of our stores, Philadelphia, St. Louis, Austin, Texas, Houston opens shortly, San Diego opens shortly, Bakersfield opens shortly. When you walk into one of these stores, we have our own entrance. You walk in, you've got this incredible eSports facility that's clean, it's bright, it's open, it's spacious, and then a little portal to walk into Five Below, which is also this very clean, bright, spacious, fun environment. And you can buy basketballs, you can buy Star Wars clothes, you can buy Marvel clothes, you can buy grocery, and so there's just a really good partnership alignment there. So
yeah,
go ahead.
Oh no, keep going, please.
Yeah, so that was the context to then rolling into this pandemic. So now we're opening stores. At the time the pandemic hits, we have 4 stores open last March, and we're like, all right, we got to shut them down. At the time we shut them down, I had this thesis that from our infrastructure that we built, there's 2 missing pieces in video games. One is the physical infrastructure, but the other is the human capital. And there's kind of this myth in video games that it would, the industry could scale. And I don't know, how much you may have heard about it, but for 20 years, competitive video games has been in and out of the mainstream public. And like, it should be here, it's going to be the next thing. And it's taken its time. And it's because there's this myth that like, because video games are software would scale them. But they can't. You need coaches, you need referees, you need admins, you need facility administrators, you name it. And so our thesis was that if we took all the store staff and instead of letting them go or furloughing them, we basically just took them and used them to program the digital operations for these camps, for these tournament operations, that we could offer a higher quality product. And that's exactly what we did. And so we were able to turn on this programming on our digital platform. If you go to nerdstreet.com right now, you'll find a whole assortment of competitive opportunities, coaching, camps, tournaments that are all curated in our gateway and produced by our staff, with a high quality integrity level that, parents can trust as a safe, productive environment. And so, that allowed us to keep the stores off, keep that low cost, not, kind of just pause, as much as it, broke our hearts to see that there's kids in school districts all across the country that don't even have internet access to do remote learning, let alone esports. We just, focused on what we could do, and we built our platform. Thanks to some relationships with publishers like Riot and professional teams, we got this massive exposure. We took off. Suddenly there's a ton of people coming and playing on our platform. And at that time we said, why don't we, raise capital to continue building, because we know this is going to come back. And like, the more we keep building, the better we're going to be in a situation to take advantage of that. And I pitched a lot of firms. I pitched a lot of people, got a lot of no's. Everybody was scared. Everybody was panicked. Probably the worst possible time to raise venture capital for a live events business was last August, and it was pretty miserable. And so then I'm listening to, another podcast, and I hear this guy talking with a vision I really aligned with. His name's Joe Lonsdale, and he runs 8VC, as well as, one of the early backers of Palantir. And I was just so impressed with him. I wrote him a letter just to say, like, hey, I really appreciate what you had to say, which is a habit I have of sending my people who inspire me a letter. And so I wrote him, and whatever. A couple weeks later, I realized, wait, Joe talks to Founders Fund. Founders Fund has always been like kind of my number one, like, how I looked at what Peter Thiel did with PayPal and with Facebook, and then what, Brian came in and has done recently with everything from, Airbnb to Palantir and more. I really just looked up to them, and they were kind of the top of the chart. I said, all right, I'll send Joe an email. So I emailed Joe. I said, I think my exact quote was, I'm nothing if not ambitious, but would you mind introducing me to Founders Fund? Yeah. And he goes, sure, here's Brian and, Trey Stevens at the time. And they jump on a call with me, and Brian, I at the time hadn't realized, had this background in video games, and he's just totally understood what we were saying. He was like, I get it. This makes a lot of sense. What you guys are doing, seems to be the fix for that problem. Like, why hasn't this taken off in 20 years? This didn't exist. And now this can be, the real amplification point for the industry. And so we did, I would have used the term bridge, but then somebody told me, bridge means debt, and it wasn't a debt deal. It was just a, kind of mid-range between our A and Series B round that we did to bring him on, give us enough capital to kind of continue our growth through the pandemic. And now, we'll get back to raising a Series B pretty shortly here, probably in the summer, as we continue, our growth. The acceleration we've seen, at each step of the way has just kind of continued to validate everything from, unit economics to consumer market fit. In 2019, I think, or in 2020, I think we had 2,900% growth in our viewership on our channel, our Twitch channel, where we broadcast these events. And then in January and February of this year, we surpassed the whole year of last year. And so, the growth has only continued to accelerate. We've now passed 200, I think 250,000 followers on Twitch. And, it really is starting to accelerate because we're providing, the access point that helps kind of grow all of the different pieces of the ecosystem here.
Whew, lots of good stuff in that. I like it. Lots of really interesting. Wayne, did you, throughout this whole process, did you have any reservations about the Five Below deal as any kind of tangent or distraction? And I don't know, what were you coaching in terms of just raising capital? It sounds like your thing is grow fast, grow big. Any tips or advice you were sort of coaching along the way?
Sure. I mean, look, what we're all about at 76 Capital is getting behind entrepreneurs who are extremely passionate, who are smart, who are nice, and who want to change the world. And if you think about all those traits, you think about all those things, John exemplifies all of that. He's someone who's incredibly passionate about the gaming industry. He's incredibly smart. He's such a good person. And that's something that is really important for us, because look, as seed investors, and we get in early. You hear about all these, John talks about all these rounds, all these new people. It takes a while to build really great companies. Companies do not, go public overnight. So you got to spend a lot of time with entrepreneurs, and it's great spending time with John and the team that he's building now. So what was really important. And of course, John's vision is just so big. And that's how we think at 76 Capital. So, as John said, I'm the guy on the board who's always saying, go, let's go, keep going, keep pushing, keep talking to more people. John's saying, oh, people weren't interested in what we're doing. I'm like, John, keep talking. you're going to find the really big group that's going to take us to the next level. And that's what's so exciting about having Brian and Founders Fund involved right now. We found a great group. You mentioned, Five Below, and look, that the story of that company, what the people that built that company, Schlesinger and Velios and those guys were these incredible entrepreneurs who built a next generation dollar store.
Yeah.
And now, you have Joel Anderson, who comes from Walmart, who has this unbelievable pedigree of knowing how to scale businesses. There's over 1,000 Five Below stores across the US. They've been growing, before the pandemic. Now they're a publicly traded company. I mean, it's really great to have them. And as John said, the kind of vision that he has, and also how he's knows how to execute and just get things done has been incredible. So in a way, sometimes Joel and I balance each other. I'm like, go. He's like, wait, here's what we need to go do. And then we're so fortunate to have Tucker Roberts and Joe Marsh from Comcast Spectacor was well with us. And their experience of knowing how to run physical events, knowing how to run professional, traditional sports teams, whether that's the Flyers or the Sixers or venues like the Wells Fargo Center, as well as T1, which is the number one, esports team in the world, and it's based in South Korea. And so for us to have this amazing team, now we add, it's like the icing on the cake. Here comes Brian and Founders Fund. We're off to the moon. And I don't say that lightly, because that's where John wants to go. Yeah,
good stuff. I won't keep you guys too much longer. This is pretty interesting. Really cool stuff. Any just broad strokes, forecasting or crystal ball comments of where this goes? And, do you think you're going to be raising lots of money? And you probably don't want to play your cards too much, or keep them a little bit close to your vest, but like any just broad strokes, like where does this go from here, either with your business or esports in general?
Sure. And like, let's not confuse it. We have an ambitious goal that's going to require a lot of capital, but I spent 12, 15 years bootstrapping, and it's in my blood. And so, how to scale without spending is, always on my mind. Channel partnerships and the things you can do yourself that other people take for granted, outsourcing. The cost basis for the deployment of our venues is a fraction of what our competition deploys venues at, because we rethink every single step of the line, from how are these desks being built, shipped, manufactured, and distributed, to should we just make our own computers instead of buying them? And that's what we do. We have our own branded PCs that we have and sell. And so with that in mind, as we grow, we're going to try to be as efficient as we can with that capital, while not sacrificing anything to get to the mission here of reaching everybody in the world who wants to be a part of this industry, and can't be. The reality is, in America right now, there's 99,000 high schools. I think last time I looked up the stats, like 2 years ago, 3,000 of those high schools signed up with 15 or more students for esports. The last year, it was 6,000. This year, it's 12,000. That means that in 1 year, 3,000 high schools will graduate a class of students who had all 4 years rooting or participating in a varsity esports team.
Wow.
What that is baked in market growth that nobody right now is accurate, besides the people in the industry who see it and are taking advantage of it. Nobody's talking about, and when we talk on CNBC about Ninja and really exciting pro teams and yada, yada, this is not even the tip of the iceberg, because we haven't created an access point for developing this type of ecosystem and this type of fan. So what's coming, is a situation where over the next 10 years, I don't think sports goes anywhere. I'm a huge sports fan, and sports will always be here, but video games and the competition of video games will surpass sports, because it can reach more people. And right now, sports is the largest entertainment vehicle in the world. Competitive sports are largely the most influential, entertainment vehicle in the world. And when esports reaches that pinnacle, and suddenly, the hundreds of millions of kids who play youth soccer are playing esports, we're going to see a market growth that starts to reverberate as these generations graduate and move up, that is going to create an entire ecosystem well beyond just the competitions we're talking about. We're talking about apparel, clothes, equipment, housing, hotels, restaurants. Things will all be influenced by what's happening right now in this competitive gaming space. And so we're in it, to capture as large a piece of that market as we can, and in a lot of ways ride the wave that's happening regardless. But our biggest fear is that if we don't do what we're doing, this is going to be an industry reserved for the privilege. And, all those kids graduating from high schools are going to be middle-class high schools that can afford to give their kids computer labs. And it won't be the schools that need it the most. It won't be the kids looking for this type of opportunity that have relied on traditional sports for this type of opportunity for so long. So I think the market growth is beyond what anybody's expecting. If you've seen Ready Player One, that's where we're going. The world will have video games at its center, no matter what, and all the trends point there. Automation, the, career trajectories and employment numbers, to, the entertainment verticals, all the way down to what kids are spending their time on in schools, and all the things point towards a society that's going to put this at the center and prioritize it. And so there's my crystal ball for where we go.
One little question, final question. What single gateway game would you put your 7 and or 10-year-old children on today so that they become professional esports players in the future, so I can retire early? Go.
Two answers. Minecraft is absolutely, but don't think about the only path as being a pro esports athlete. Look at me. I got, soccer paid for everything and took care of me, and I'm not a professional soccer player, but I did use all those skills to build a career for myself. And that's true for billions of people, over the past couple decades who use sports. So what I'd say is Minecraft, because Minecraft is a, kid safe game where you're building. And what's better than kids building, using their mind to create and build things for themselves? I'm not necessarily somebody who recommends shooters, for kids, but at the same time, you recognize that might happen, and the shooters mean hand-eye coordination, and there's a whole other, reality there. But Minecraft is my answer.
Minecraft, good. They're doing a lot of Roblox, so I guess it's
Roblox is great. Yeah, Roblox is great. I should give it more credit. It's just so recent that I'm not like Minecraft's decades of being programmed here.
Cool, guys. All right.
Nathan, sorry.
Yeah, please go ahead.
But I would also say, for your kids, they could go to the camps at Nerd Street. We also do a lot of programming as well, that could be really helpful across a lot of the different games that are out there.
Right.
And so that's certainly something. And we've there's some great shows that that Nerd Street produces. They actually got an Emmy last year for one of the shows that they created, which was a great story. That and they do shows on NBC. So that's something that is definitely to think about. And it's really it's an incredible story. And it's one of the things that we're so proud of John and his team. And we're, we just love being, jumping kind of on their side of the table, working with them, building with them. They're on to something. They're really onto something big. And the other thing I'll say for your kids, Nathan, is they could also go to college and have a scholarship. And right now there's over 200 colleges across the U.S. that offer scholarships for kids that are really good at esports.
I like the sound of that. All right, gentlemen. If people want to learn more, it's Nerd Street, but stgamers.com, right?
Yep. Pretty much any form on the website will work, and Nerd ST Gamers on all of our socials.
Excellent. All right, guys. Thanks so much. This has been super fun and entertaining and educational. My video game, I was a LAN guy back when Doom, my first job out of college, playing Doom on LAN. That was where I left off.
Me too. Yeah. The old the Cat 5 Ethernet wiring up our houses to play Doom.
Yeah, fun stuff. All right, guys, thanks so much. We'll catch you after your next round and see how the story evolves. But
thank you.
Keep up the good work. Cheers.
Appreciate you having us. Appreciate the discussion.
Thank you.